All right, testing. Testing, 1, 2, 3. Testing, 1, 2, 3. The rain in Spain falls mainly on the plains. Hang on. Why is this not working today? The ants in France stay mainly in your pants. Do we have sound? Anybody here? Nobody's responding. All right, it is Tuesday, the 1st of June. By the way, no one's responding, so seems weird. All right, maybe if I refresh. Yeah, all right. See, if I refresh, that works. All right, good. Good morning, everybody. It is Tuesday, the 1st of June, 2021. Welcome to Forex.today, the YouTube community of over 18,000 foreign exchange traders. We're going to look at U.S. dollar, the euro, the Great British Pound, the Japanese yen, gold, oil, Bitcoin, and whatever you want, because you're the boss. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. G'day, mate. Wow, camera's a little crazy, huh? What am I going to do? Oh, maybe I can shrink it a little bit. That's a little better, huh? At least just slightly, maybe. All right, good. So anyways, yeah. Hey, my name is Wayne McDonald. I'm a currency trader. What do you want to trade? What's on your mind, folks? Let me know. What do you want to trade today? What's your thing? Oil, CAD, Noki? Anything else? Let me know. I will do my best to answer your questions, both technically and fundamental questions. Technical or fundamental, that's fine. Trader psychology, that's fine. So what we're looking at is June, a whole new period of time, which is very important. Okay? Very, very important. June hosts a Fed meeting, which is very important. It hosts a vacation time for me. later in the month. And there's also often a spurt of trading activity, a fury of trading activity. And I like to take advantage of that, so I've been very excited about it. If you recall back in April, I said May would be sideways, but June would be up. Well, May was generally sideways, and I'm hoping we have a big June, at least a start to June. Okay? Cool, right? Cool. So anyways, ask questions, get involved, take notes, click the thumbs up button, leave comments on the recordings, treat your other trading contemporaries, the other people in the chat. Treat them with dignity and respect. If you're a spammer, we're not interested in your nonsense. Go do something useful and productive with your life, please. And what else? I'd like to thank Traders Way for being a foreign exchange broker that is earned by loyalty and respect. I appreciate them in our community. You're going to need a broker that executes your trades, executes it quickly, charges you fair fees, even competitive fees, pays you massive swaps, world-class customer service, generally nice people. Tradersway.com, demo account, start there. When you're ready to trade real money, you'll already have an execution partner for your successful Forex trading business that you trust. FD9 says, hey, we had sideways after mid-June. Yes. That's right. All right. Did you guys catch Bitcoin over the weekend? It dropped to 34. My line was there. Closer, but no cigar. Closer, but not quite. So we'll see. Maybe later. Okay. Olin says, are we sideways to NFP? No, you got to get your trades on before NFP, right? That's right. Friday. And I think I just scheduled a meeting on Friday, so shame on me. Friday, we will be at the FX Street YouTube channel for Trade Non-Farm Payrolls Live, month 182. Cool. Keefe, Kevin, you caught Bitcoin over the weekend? That's cool. Cool. Now you're like, you got your stop jammed, I'm sure. Okay. So we'll see. We're in day trading zone. So we'll see what happens, right? Cool. That's just that. Let's move over to the indices. Dollar has weakened since last week, which is nice. Yen has weakened since last week, which is nice. Swissy sort of was weak sideways. All right, so a little bit decoupled here. Bitcoin giving back. Kitty cat, strength. Euro, modest strength. Aussie, neutral. And pound, down. Iago says, I checked seasonality and June targets are all set in the first and second week. I know. Okay. So I am going on vacation next week. Or not next week, soon in June. Because, Thiago, I scheduled, not really vacation, that's a big word, some time off. I scheduled some time off based on when I expect volatility to wane. And obviously I planned that many months ago. So, yep. That would be the assumption. Zip over to commodities. Let's go here. Let's do this one. Okay. I drew that line in the sand a long time ago. And I told you to do the homework way back in April. Do the homework, analyze seasonality, 5-year trends in inventory levels, and where we are compared to those historic norms and where we think we're going to be. And if you did the work, this makes sense. And you would have been in it low and you would have been making tons of money. I don't know, not tons, but whatever. We might have done this even in March. I don't think I drew the vertical line. But isn't it interesting now, on the exact day of the line, we break the high? What do you guys think? On the exact day, on the day, we drew this weeks ago, on the day we hit the line, we make the highest high in years. What do you guys think of that? Any thoughts? Maybe what's going on here? How about that? Thanks for the courses. They're helping. All the pieces are falling. Cool. Right on. So what's going on here, guys? Now, did anybody... Oh, no, that's Meta. No. What is it? Like, did you guys do any of that work that I asked you to do? Gee whiz, I swear it was a month ago. Okay. And it's not an OPEC meeting, Alton. That doesn't occur the day of that orange line. Okay. So if you did the work, guys, and you were able to think forward, like I said, this makes sense to you, right? Maida says, yes, it was, right? Yeah. Then you would have had a strategy based on your analysis. And my guess is you're making money on oil because you've done the analysis. Okay. Okay. And if you're scratching, like, I don't get it. I don't know what he's saying. Like, does that mean buy oil or sell oil? Then you didn't do your work, or you just don't understand yet. Okay. But if you did the work and you have some basic understanding of things like supply and demand, you'd say, oh yeah, well, I've been trading into this, and you will continue trading into this, and you have a much better understanding of why you're doing it, not just what you're doing, but why you're doing it. And that's called a true strategy, right? Okay. So I'm glad that on the exact day we make, we make a very big high. Like, look at it's higher than anything on this chart going back years. We're making a multi-year high on the exact day. Cool. So if you did the work, you own it, you earn it, you're probably making money, you deserve it, you'll keep it, all that kind of stuff. Okay. Yeah, certainly not Illuminati. Nothing beyond my degree, which they tell me I'm an Illuminati, but I knew that before any degree. So, yeah. Cool. So that's that. So I don't know. Beyond that, I don't know what more can be done. You either did it or you didn't do it. All right. Cool. All right, so let's take a look. I have a area that I've grayed out manually, and then I've added 2 horizontal lines manually. Okay, this occurred last week. Probably the swing trading group. Okay. Okay. And on this gold, here's what this says, by the way, if you can't read the chart. This says this. Okay. Cool. So now we're in the process. Okay. We top out on a holiday. Okay. And now maybe some sort of breakout type strategy. I hope. Holidays always make it a little more complicated, but it's probably what's going on here. Yeah, right on, Kevin. Transparency is most important to ourselves, right? Certainly down the line, when you trade other people's money, transparency is required. Not per trade like you're talking about, but just if you hide anything, you're dead. Both sort of on the basis of working with clients or even regulatory compliance, right? If you lie, you can go to jail. I mean, at some point, transparency is the name of the game. So, yeah, awesome, dude. Hey, oh, listen what I say, oh, I'm not but any questions on gold? Again, this is Thursday and Friday of last week. Right? You can sell gold? Yeah, if you're a bear, but I don't think you like the higher high, do you? Okay. And now also, by the way, this is why I don't like trading late. Like, I like this trade here. So very often people are like, so what do I do today? Well, today you're halfway through the trade and you're stuck at resistance and you want to get in on the buy. What do you do now? Like, it's so mediocre now, right? But you would probably try to continue this up. Okay? But this is where you're supposed to. To me, this is the only trade. Okay? Now, if you're trying to catch this Monday instead of Friday, that is a difficult one, and I don't know if you even got the opportunity. Difficult. Maybe not sort of your fault kind of stuff, just difficult. You'd probably have to drop this into day trading, right? Right? Like but here's the thing, like for example, when the market opened, we were here. As a bull, you cannot buy it. So what could you do? You got this, you're probably thinking 4 hour 21, which you're way out of position. Maybe there's day pivots in here, but I don't think there was. It's really difficult to catch the bull when he's running. Right? How do you climb onto the bull when he's running? Much more difficult. Okay? This is the trade, and to me there isn't really another trade. It's just, you're trying to catch it after the fact, and I find that very dangerous. But do you guys see that? Okay? Here's a bottom, here's a top. This has been analyzed. as the obvious entry on Thursday or Friday. There is, to me, now I'm a trend trader, I'm a swing trader, I'm a position trader, so that's how I look at the market. Like, that's the only trade that exists on this. Everything else is too little, too late, and little risky, and it doesn't pay as much, and it's just convoluted. Like, why? And it happens though. Like, it happens. Maybe you're trying to catch this because you couldn't trade it till Monday. I know Monday was a holiday, but whatever. And then maybe today, this is a 4-hour entry for you, right? But I find it more dangerous. It's so late. Like, if you're going to be that aggressive now, like, I'm going to catch it no matter how late I was, then what I never understand is then why weren't you that aggressive here? And I think it has to do with the behavioral side of it, right? The behavioral finance side of it is like, why don't people buy houses when the housing market's falling? They don't buy it because it might fall further. But they do buy housing. They do buy houses when the market's going up. Housing prices are going up every month. Every month prices are going up. So what do people do? They buy. They buy high and hope it goes higher. Okay? And I also find that very dangerous, right? Right? I find that very dangerous. So anyways, that's just sort of my personal view on it. Ultimately, you might just jump into a day trade and take it, right? Okay. Play the psych level, obviously. So there's oil, right? Brent is already overbought. I don't know if you guys are like doing Noki. I think Noki's over here, isn't it? No. Anybody doing Noki? Hey-oh. What do you think? Plan A seems to be working just fine. Are you guys working on your analysis? Do you do things like this? Plan A, plan B, plan A, plan B. Are you getting that into your mindset? Greg's like, that's what retail traders do. Yeah, well, my mindset or my POV as far as an educator, trainer, motivator in these webinars is to think like a professional, right? That's the whole thing. Yeah, Kevin didn't get filled. I get you. Okay. Get you. Okay. Now what? That's the thing, right? So now what's the next one? Well, one of the things, and by the way, I bring up Noki for more often now because somebody in the community asked. I believe it was in the YouTube comments. They're like, can you cover this more? They're from Norway, and that kind of stuff. So I started bringing it up, and I discussed how this could be your Brent trade. So if you're long Brent crude oil, you're going to be short USD and OK. Norway, right? You're long Norway. Okay. And then I asked you, going back to the oil discussion that we had earlier today, I asked you to look at historic inventories. Historic, going back 5 years. And then I asked you to look at where we are now and where, based on the 5-year averages of inventory levels, where you expect oil inventories and thus oil prices, assuming demand is constant or even growing, where will prices be in the future, and when will they start to move in that direction? I know it's a big question, but here's the thing. you would have looked at all of that information and found out or said to yourself, yeah, the closer we get to this period, June 1st, the more likely that happens. You would be able to predict the future, and you would be invited into the club of Illuminati, or what Harvard calls the Society of Educated Persons. They don't actually say Illuminati, but they gave me a lamp because I'm illuminated. I'm like, wow, this is pretty cool. How come the lamp is plastic, you bunch of $40 billion in the bank, and you give me a plastic lamp? How come it's not made out of gold? Is this what Aladdin used? I rubbed the lamp. Yeah. I rubbed the lamp, but nothing's happening. By the way, do you know what was inside of the lamp that Harvard gave me during my commencement? They're like, welcome to the Society of Educated Persons. Here's a lamp, you Illuminati bastard. Do you know what was inside the plastic lantern? A note from the Alumni Society begging for money. And I'm like, yep, that's what it is. You know, Maida, I don't know. I might have accidentally thrown the lamp away. Can you believe it? I might have thrown it away. Yeah. But maybe it's symbolic. Pretty funny. My point is, my Illuminati lamp is plastic. Okay? You, for example, like, my lamp doesn't do anything. If I poured oil into it and lit it on fire, it'd melt. So it's nothing. It's an illusion. It's symbolic. What it represents to me is I did the work. Okay? Right? Like, grad school, I don't think made me smarter, but it proves I'm a tough son of a bee, and that I do the work. I did the work, and I did the work beautifully. Right? Okay, you understand? And that's where sort of, when I say to you, look at all these 5-year averages and oil inventories and, for the supply side of the equation, and then you fix demand or constant, or even, shift the demand curve, be based on your assumptions of a global macroeconomic analysis, and you get all of this, and then, with that, you do this. But it wasn't a lamp that was being rubbed. It was you doing the work. Right? And as Maida says, that is the important part. That is the thing. I don't need the trinket. I don't need the souvenir, although it would be nice if I found it. But the issue here is, this is what you need to be doing if you want to be, quote unquote, whatever, the Illuminati, whatever you want to call it. It's just, it's sort of having a little bit of fun. But here's the thing. You want to make, people come to Forex and they're like, I want to be filthy, stinking rich. Do the work. No. Make the decisions. Be the boss. Okay? Be the one that other people turn to because they can't do the work. They can't make the big boy or big girl decisions. Okay? So they turn to you and they're like, help me, help me, help me. Right, Kevin? Help me, Kevin. I don't know what to do with my life savings. And I hear about the dollar becoming worthless and China taking over the world and all this. Like, what do I do? Help me, Kevin, help me. You're like, I got this. Okay? Okay. Yeah. But that's what it truly is going to be all about. So you're like, well, I've analyzed all of these variables and I foresee the future. And really what it is you can decide this and it's not a guess. You don't know if you're right or wrong. That's why we have risk management. Okay? But you've done the work and you know. You have a very educated opinion based on sound FX analysis. Okay? And you can say, I understand the flow of money globally and why it's flowing. And with this knowledge in place, plus the understanding of the normal ebb and flow of money, like the ebb and flow of the tide, you can make rational decisions. No, sorry, Daniel. No. Okay. So there you go. So you do things like, look, there's a plan A. Done. Okay. Do you know what the plan A was? 2 weeks ago, we were here on a Thursday. And the plan A was sell. And it was based on a front run of June. And like I said, if you did the work on oil inventories, as I asked to be done, you would understand why you're front-running June before June happened. Now, ideally, you would have been short here, or here, or here, or even yesterday. Like, I don't know the timing, but we know the prices. And you're assuming the timing now because you don't know exactly when. But what do you know? Well, based on the analysis that you did, okay, let's do it this way. Based on your analysis, you have a little bit of guidance, knowing that that day, sometime before this day, okay, so really it was Monday or Friday, but here it is. It was actually last Monday because we did this work here. This is too early. This is about right. This is definitely. Cool, right? Yeah, not always, Daniel, but yeah. I mean, it's one of those things, right? Yeah, definitely. Cool. So anyways, enough of that lecture. You either earn it or you don't. Not my problem, right? Okay. Miranda got peso. Oh, cool. Let's do peso. Wow. All right. Here we go. Top. This is where I'm short, by the way. Nice. Okay, there's my trade. Nice. Let me highlight it. Cool. So, what do we got to do? Okay. Well, it's out of position. What are you going to do? All right. It's out of position. So we got to zoom in. Okay. You guys tracking the data? Things I think are looking a little bit better each week. the data out of Mexico gets a little bit better. There's like as far as jobs in Mexico, they're adding to like the construction industry and some manufacturing jobs and stuff, and the like sort of the United States, the job economic releases have been quite volatile, but on the long run shows steady. If you smooth it out, jobs are being added in Mexico. Unemployment is going down, which is a good thing. Productivity is slightly improving, all that kind of stuff. So, yeah, I'm still bullish on Mexico. We'll probably be stuck at 20 for a while, but in the back of my mind, I am thinking 10. It may be a while though, right? Rowan says, hey, is a relatively new trader allowed to join the swing trading group? You need to be either have watched all the videos in the training courses, or you're in the process of doing that. Okay? Okay? But it's not a place to come in and I mean, you obviously can ask questions, but it's not. We do very proactive planning and trade setups, and not a lot of training. Maybe there's discussions, and I'll go through thought process analysis, and I give people feedback on their trade plans, and groups analyze together, but it's not like training per se. Okay? So you could do it, okay, but realize it's very proactive and very interactive. So you will need to go through all the courses, right? And if you haven't gone through the courses, you're just not doing the work, so it doesn't matter. Okay. Yeah, sure, Daniel. But if Rowan's signed up for FX Bootcamp and is in the courses, going through the videos, let's say in the middle of going through the swing trading videos, there's no harm in him being in the group either, right? There's no harm because he's doing both at the same time. All right, cool. So, So, yeah, let's go through. What should we do next? Yens. Okay. I missed one. Missed one. I don't remember why. This is so ridiculously beautiful. Yeah. I don't know. I don't know why. I'm upset with myself. Yeah. Should be in that. Sorry. To me. Yeah, my heart sinks. Oh, yeah, you caught that one. Keefe caught that one. Yeah. You should be on this if you're trading yens or CAD or something. It's the same as buying oil. It's the same as, buying Norway. It's the same as USD CAD short. It's quite a beautiful trade. If you're there 90-50, I don't think you can get 90-50, but it's it is essentially 90-50 retrace. But look how clearly it's identified, right? This price, or this price. Yeah. 90.59. Yeah, and that's probably with the 3 pip spread. Yeah. Okay. Wah, wah, wah. So good. Very good. Very nice. 4 hour 21. Weekly pivot. These might be Fibonacci's. Pretty easy trade. So if you got it, awesome. Why am I not it? Yeah. Okay, fine. Let's take a look at Euro. Okay. Nice. You got to go further out maybe. Okay. Nice little front run. Nice little 1, 2, 3. Then a second one. You see how I have this all marked out? So this is probably something we did in the swing trading group. Okay. Okay. And if you recall, swing traders, okay, in the swing trading group last week, we talked about the likelihood that we will not hit these in this month, and that you will have to use different techniques to get in the trades. And these might be examples of that. All right. That's all. Okay. Also, when it comes to front running, for example, what was the attitude towards June? I want you to think about that. What was the attitude that we had even way back in May? We talked in April and even March about what was likely to happen in the near future. What was the expectation of May? And what is your... Well, actually, I shouldn't have drawn it that way, but anyways, we'll leave it there. And what is your expectation for June? Okay. And then based on, excuse me, expectations, remember, expectations means you expect. It hasn't happened yet. So if you expect June to provide a market or market conditions of a certain expectation, you think it will be a particular way in the future, then that thinking process would lead you to behave in a certain way. It's a biases, right? So how do you handle this area? And that process of thinking forward will help you, okay, anticipate. Okay. I also believe thinking forward helps you understand when you are wrong. Because you will get into this narrative of like, what the hell is going on here? Is the kind of narrative if this is coming down, you back off and say, whoa, 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 whoa. June wasn't supposed to be ice cold. What the heck is that? I mean, think of it. You run out to the swimming pool, you're barefoot, you got your Brazilian style bathing suit on, right? You're all lathered up in oil and you find out it's snowing. So what do? Jump in the pool or go back inside and say, wow, I didn't expect that. I am totally unprepared for the conditions. Okay? It's good to know you're wrong. In fact, it's the most important thing, because being right is easy because, well, you did the work and you thought about it and you had a plan and you did technical analysis and then you traded, and of course you're right. Why wouldn't you be right? It wouldn't make any sense for you to be wrong. So if you are wrong, it's much more important to know that you're wrong. Okay? Okay. Well, Marina, this is more like a simple gauge. It's like euro dollar, but not so tied to dollar. It's still a gauge of general macroeconomic activity. Okay? Money is flowing away from Japan, which makes sense. Money is flowing to Europe, a major economic center of the world. Okay? And I almost look at it as like general macroeconomic indicator or something, right? I could change this name and say, oh, it's global GDP or something, right? It's terribly simplified, but, yeah. And then from here, you could say, how do you handle the pound, right? And then you carry it out that way. I think you're going to find pound is much more reflective of Great Britain than the euro is a reflection of Europe. I don't really look at euro yen and euro dollar as a reflection of the European economy. Like I said, it was like a pseudo reflection of that, but it has more to do with the direction of the yen and the dollar than it really is the euro. Euro yen isn't going to move a lot because of, German IFO. Okay. It's going to move more on the general flow of money. Okay. But pound, oh yeah, is very much Great Britain. Okay. Okay. But it's pretty rare that I'm like selling pound yen and buying euro yen. I may have never actually have done that. Okay. Instead, I might make a decision. I might make a decision on where I think euro yen will be 3 days from now and say, oh, pound yen's down. I'm a buyer. Why? Because I think euro yen will be higher in 3 days. Okay. Greg says the euro area has so many problems right now. Yeah, but when did they not have problems, Greg? And I don't mean that facetiously, but like that's how it's been for as long as I could possibly remember. Okay. Theta says, when will pound recover its power? I'm not saying anything negative about the pound. I'm saying the value of the pound has a lot to do with the British economy. That's not me talking about pound recovering its power. Okay. The Eurozone probably, but anyways, let's just say that you make a decision. Do you think the pound's going up or down? Okay. And one thing you might want to say is, well, if I'm going to be forward looking and just look at general macroeconomic analysis, let's say, you think at some point in June, this will be up around 136. So you're thinking up a couple hundred pips. Great. But up is up. Okay. Cool. So then you look at pound and you're like, oh, I guess I need to buy the pound now. Why? Well, it's a retracement. We're at a fib level. Okay. And in the next probably 2 weeks, we'll approach 60 on this. Certainly 57 and a half. Okay. So it's not me talking about the power of great British pound globally, and the British Empire is not like it was 100 years ago. Okay. Cool. Thank you, Morena. Do I trade divergence? Yeah, but here's the thing with divergence. You can anticipate that where it's likely to happen before it happens. Right? Like divergence, yeah, but I don't look at something and then randomly discover divergence and say, oh my God, I didn't see that. I guess I should make a trade because of divergence. No, I mean, right. When you add fundamentals, correlation, seasonality, and technical analysis together, very, very often it's understandable. So for example, you will see divergence at key pivot points. Why? Like a monthly R2, for example. Why would I assume divergence would happen at a monthly R2? Type in a question mark if you don't know. Otherwise, take a guess. Why would I assume you're going to see divergence at a monthly R2 or near a monthly R2? For you to answer that question properly, you would have to understand what creates divergence in the first place. And if you don't, then you can't, you see? But if I teach you, then you can. Correct. It's profit taking. So you can anticipate before there's even close to divergence. You can anticipate, well, if we get out there, a reasonable amount of the market's going to take profit because they know how to trade. So they'll take profit. Divergence will be created. Yes. Okay. If it double tops at R2, you'll get actual selling, and that is no longer divergence, that's a reversal. Okay. And often, once again, seasonality or fundamentals will tell you that. More often than not, whatever happened in the month that you just took profit on, you're going to try to do again next month. Okay? And so you can anticipate where people will buy again. Let's say front running the next month's M2. Okay? So you can anticipate that the divergence will end there, more specifically that you should be buying in anticipation of your next future rally. Okay? Which is the end of the divergence, but very often a divergence trader will wait for the divergence to undiverge, which is again a little bit late because they didn't see in advance where buyers would buy. So by the time you see your divergence indicator, confirm your divergence, well, very often you're, again, a little bit late. It's already happened. People had already bought. So very often a divergence trader will say, oh, look at the divergence. I can tell you 3 days ago, people that knew what was going on already took profit. So what advantage is that to you, that if all the smart traders already got out, what is that? All you can do is confirm it. And then 2 or 3 days after all the smart traders got back in, you're like, well, I can confirm with my divergence indicator that people already got back in, which means you're already 2 or 3 days late. Now, here is when it gets even more dangerous or whatever. When you're trading divergence on small time frames, yeah. It could be misused, I guess is what I'm thinking. It could be misused or even worse, mistaught. Because if you're not doing it on the higher time frames, like let's say a 4-hour chart, and you can see on a 4-hour chart we're approaching a monthly R2, you can say, oh, look up there will be, right, some, and you're forward looking, but to purely respond to only short-term divergence without knowing the medium and longer term key levels, you're really trading blind. Okay? Okay, you're so there are many times when divergence should be ignored because, well, you're missing the trend. You're missing the areas where most buying or most selling will take place. And you could really, I don't know. And to me, it seems scary that you would throw down a trade because your MACD is diverging. And I'm like, why did you take that trade? Well, I spotted divergence on my MACD. And I'm like, yeah, but why did you do that to the Great British Pound? You're like, well, yeah, I only do technicals. Right. And I just melt like, oh my God. Right. So it could really be, yeah. I mean, again, if you can anticipate it, then you don't need it because your anticipation generally is enough, I guess is what I'm getting to. So you don't see me even use oscillators much anymore because I can anticipate them. You can use them. It's the standard operating procedure. But once again, I can tell you that we are in a zone where you're likely to see some divergence. Okay. This is a zone where you're likely to see some divergence. Okay. Theta, which oscillator for divergence? I would use, me personally, I like MACD because I make decisions first on the market, not on price. So stochastics is price, overbought and oversold conditions of price. But I don't, no, I'm more interested in people exiting and re-entering the market. That's right. Rookie says RSI, fine. I used RSI for 2 or 3 years, and I just felt that in conjunction with stochastics and MACD, it really didn't add any extra value. If anything, it confused things. So I just dumped it. But if you said you use RSI, but you don't use stochastics, I'm like, okay, fine. Okay. Now, MACD measures something different. It doesn't measure candles. Okay. Right? So your RSI and your stochastics are looking at candles, where the MACD is looking at moving averages. So they're a bit different, right? Okay. Now, Greg says he would rather use Stokes, right? But again, I changed my settings so that those tools do very specific things. But that's fine. Like, right, 1 or 2 is fine. It's the difference to me in my mind and Greg might not be thinking the same way, but he's using the tool appropriately. So it's either way, it doesn't matter. But what I'm thinking is I separate price from market, and I manipulate the tools appropriately to represent these things to me. Okay? And since I use leading indicators, I can already anticipate the price. I'm not interested in the price. I'm interested in change in market. Okay? So if I see divergence in the market, I might want to pay attention. But once again, because I'm using a leading indicator, once we get down here, I would assume the price divergence this way, if you're only measuring this, right? Because that is several days. So a short-term trader might only be looking at this. So they're saying down. So you would see this divergence, but I'd already anticipate that on price. I'd be more interested in confirming it in the market. Okay. So my first trade would probably be there. My second trade would be there, confirmed by a MACD divergence, which would be heading back to the waterline. Okay. And then, of course, you would cross the waterline when the moving averages cross up. But the divergence of MACD would be this way. Okay. Which means, like, if I were drawing my MACD, what I'd be looking for is, and then you'd have your waterline here, right? So this would be heavily looking at this. I'm not going to do it accurately. I'm just going to give you an example. Okay, you'd be way oversold, but then heading back to the waterline. Okay. Meanwhile, price very often is doing stuff like this. Okay, it's not going up, but less and less people are short, and then it crosses. Okay, like that. So that's how I do it. That's how the Wayne do. Okay. So just waiting. Very mediocre trade, getting very mediocre results. Okay. Trying to stay up. Never got through the 85. Waiting my turn. Okay. And, right, anyways. Yep, this one just pissing around. You can see I'm long at the central pivot point and getting nowhere. So yeah, I'm going to have to decide what to do with this. Yeah, I'll have to make some decisions here. So my decision, so you might be thinking, well, let me explain what I'm thinking. How about that? My trade plan was this. And some traders might think, well, Wayne, it could still do this. And you're only down 3 pips or 5 pips or 10 pips or something, right? You're only down 13 pips. You should stay because it might go up. And I understand that logic. The issue is my plan was this. So if my plan is dead, should I stay in the trade? And my general answer to that is no. My trade plan has failed. Oh, but it might go up. Yeah, I'm not interested in that. It might go up from here. Well, then I can I could then create a new trade. Right? Do you understand? I can create a new trade. But this is not the trade I had planned. Okay? So I will need to make a decision on that. Look at Aussie here. Still same pissy little trade. Oh, boy, that just popped. Pissy little trade. Okay. I bought it on the monthly M2. What do you guys think? If I break even on this trade, was it still a good trade? Okay. Nuno has the same trade. Yeah, we planned it in the swing trading group. So it makes sense, right? Yeah, lots of people have the same trade. Yeah. Well, that's what happens from group planning, right? How many people here took that pound Swissy trade from 2 weeks ago? Anybody on that one still? Johnny's on that? Yeah, right? Patience, right? Patience. So there's an opportunity to add another one, right? Do you think it'll break through? Well, I'm not confident in the correlation here. Meaning, Swiss franc used to be a funding currency, and I'm not sure it's not behaving the last couple of years like it used to. So it's less of a funding currency than before. Japanese yen, in contrast, is very much the same. I've been trading the Japanese yen the exact same way for my 20-year career. Nothing has changed. I love it. Right? So there's a bit of a question mark here. Also, pound is volatile because it's recovering, it's not recovering. Brexit, not Brexit. COVID, not COVID. Okay. Okay, great. So there's a bit of a question mark here. Okay. Now, this is what we did in the swing trading group 2 or 3 weeks ago. This was one of the trade plans from one of the groups. Group A, if I remember correctly. Group number 1, if I remember correctly. Theta might have been, right? Oh, Thiago, I think, presented the plan. And I want you to also filter all this where it's, when there's this kind of question, let's say that I have, then I think many other professionals would have had the same type of question mark, but the same type of history where you think it's going to go up, but you're not as sure, you're not as confident as you used to be. But pound Swissy is a fantastic currency pair. It used to be one of my favorites. Pissy is what you call it, right? Pound Swissy. Love it. But now there's this question mark. Okay? And also filter this out. What do you expect in May anyways? And what do you expect in June, regardless of everything else? Think about what I'm teaching you here. What would a trader with history with this pair and an understanding of seasonality and an understanding of economics, what do they anticipate? Okay. And I said sideways in May, rally in June. Okay. And by the way, this is not my target. Okay. Okay. 130 is not a bad number. Okay. But it'd be great to be in a while longer if I can. Okay. Okay. We'll have to just call it a 382. Okay. What we'll say is this. This is what's going on. Okay. The second thing that we can say is on a monthly basis, this is what we're catching. Okay. So how does this fit with your year-end analysis? Okay. I think it would break down like this. One of two choices. This is the low for 2021. Well, I guess that can't be. No, that can't be because this is the low. How do you say differently? I guess I should backtrack a little bit here. Well, let's just say, are we going to test this in the summer? How about that? How about that? Let's just keep it there. Let's just leave the target right here at 1.3076. Okay. If you bail at 130, I totally get you. Fine. Okay. Let's just do that. Okay. Let's do that. Okay. How am I doing with the crypto course? Well, having looked at my grades versus the average, I'm an above average. I'm significantly above average, but of course, like, not, I don't mean that arrogantly. It's just like, I couldn't imagine I'd be below average. And I don't know. I'm not average. So anyways, it would be like, I'm an A student. Yeah. Which is good, I suppose. But like any course, I have more questions than there are answers. So, but it's cool. I'm enjoying it, I suppose. Yeah. But let's just say it's really interesting, like the personality of someone that would be a regulator. So the professor is the former head of the CFTC, and the CFTC oversees the NFA. So let's just like someone that he was the largest regulatory and compliance authority for the government, overseeing Forex and futures and options. Okay? So this dude did the most you could do overseeing it'd be like running the SEC. Okay? But the SEC is stocks. And he regulated everything else. And let's just say he's got a personality like a regulator. Now, he was also a partner at Goldman Sachs, but I don't know what he did at Goldman Sachs to be a partner. Maybe it was compliance, but just interesting, just interesting. Just interesting anyways. So what I've been studying, over the weekend, I did a lot of reading. I wake up, even on the weekends, I wake up at 6 o'clock in the morning and I do 3 or 4 hours of reading. And so I've been things like issues around compliance and regulations of what have been done, what hasn't been done, how it could be regulated, how maybe it shouldn't be regulated, how other countries are regulated. But now, more interestingly, I've been focused on things like custody and custody issues, right? And and how maybe custody could be handled differently, and how custody is handled now, and why would you even need custody with blockchain? Like, right? It's interesting. Even if you go to a pure crypto establishment, like let's say Binance or like maybe Coinbase. Well, if they manage the blockchain for you, why do you need them to hold your money? Because it should just be recorded on a distributed ledger. So therefore, again, it's a funny question, right? And you can ponder this. You want to get into crypto because it's decentralized. So you open an account at Coinbase and give them your money, which would then have them do your market making for you and matching process, which is centralized. And all of a sudden you're like, what? Wait, that's an oxymoron. You want to get into decentralized currencies, so therefore you used a centralized authority to do your decentralized. I mean, all of a sudden you're like, wait, that doesn't make any sense. Right? So, it brings up interesting questions anyway. So how am I enjoying the cryptocurrency course at MIT? It's thought-provoking, and my professors like my papers, or my written responses, and I'm getting good grades. So how about that? Right? And that, as Peter says, yeah, if you don't, right. So in that case, I do use Coinbase. Yeah, I'll probably put like $300K through Coinbase. And, it's true. I don't have my private keys, right? But I don't really let anything sit in their hot wallet either, right? So I don't use it that way. But yeah, it's true. If you don't have your private keys, it's not your crypto, right? If Coinbase gets hacked and all your money goes away, they didn't hack you, they hacked Coinbase, right? So they stole Coinbase private keys, right? Which I suppose you were supposed to hold your asset, but anyways. So here's how I think of it. Even though cryptocurrency has been around, let's say 10 years, it's definitely going to mature, right? And is definitely going to disrupt industry in the way that the internet did. If you miss the whole internet bubble, don't miss blockchain and crypto and stuff, right? And really some of it is the currency side, like a cryptocurrency, but Bitcoin represents 88% of of blockchain technologies that represent currency. See, Bitcoin was designed to be a currency. It was designed to exchange assets peer-to-peer with somebody else, like to act as value. If not a currency or money, let's just say value. I'll give you some, right? I'll give you some Bitcoin and it'll be recorded on the blockchain safely. Great. Then someone came along and said, well, that was really cool, but I can't do anything else with it. See, Bitcoin was built so you can't do anything with it. The coding is so simple and it was done on purpose so you can't do anything else, but therefore you can't make a mistake either. Right? So it was designed to be that way. You can't make mistakes because it only does the one thing. Okay? Now, how about looking at it from a different point of view? Someone comes along and like, well, this whole blockchain idea that Bitcoin's using, wow, that's really smart. I wish I had a way to create applications, software. I wish I had a way to create software that used the blockchain too, because it really makes sense, because it's so transparent and yet so secure. Bulletproof glass. Okay, rocket-proof glass. You can see right through, but there's no way you can get in. Perfect, awesome. There's a lot of things that could benefit from that type of technology, right? So Ethereum was that. I look at Ethereum as Google Android, Microsoft Windows. Okay. Stephen, I'm never free, but I might be available. Let me know what's up. Okay. So anyways, so that's really, really interesting. And then Ethereum has all these applications now built on them, which are fantastic, some of them. But now so many people are using Ethereum that it's too slow. Now it's slow. So it's like an operating system that's bogged down because your Windows, while you're simply surfing the internet, is running 27 million applications in the background. Your printer is spooling in the background because, my God, you might want to send a fax any second now and it's waiting. You're like, well, dude, I've never sent a fax on my printer scanner faxer machine in my entire life. But, well, Windows wants to wait for it. You might just want to send a fax. What the hell? Right? So anyway, so your Windows machine could just be bogged down running a million things, none of which you really are doing. So what if you wanted to do something, but Ethereum's too slow because it's doing a whole bunch of crap? Great. So now you need something better. Right? And so things are growing and growing, and the idea, and it's fantastic. And so, yes, it's going to lead to things that we can't even imagine right now. But why wait until those things are imagined and real? Okay? Okay? So it's pretty awesome, right? Is that right, Hope? Forget it. Okay. Cardano. Yeah. Okay. So anyways, how about this? Have a wonderful day. I need to go eat. Peace on earth. May the pips be with you. Your mayor profits be above average. Thanks for being on my life. Thanks for being in our community here at Forex.today. Maybe join the family at Traders Way by visiting tradersway.com. Maybe join the team at fxbootcamp.com. Cheers.